One of my students recently requested me saying, Rohit, can you give me a simple filter which I can use every single day? I want a simple and a single filter. I use multiple filters. I know a lot of traders use multiple different screens. But this client of mine, he said that Rohit, just give me a simple one step filter where I just refresh the page, and whatever stocks I get, if I find setups, I will buy. If I don't find setups, I will not buy because I don't have time. I am working at a 9 to 5 job. So I just want a simple filter where I can spend, I can come home from office, I can just refresh the page, look at the filter, look at the stocks in the filter, maybe spend 15 minutes. And then if I find a stock, I will consider buying it the next day. If I don't find, I will just skip. That was his requirement. So I came up with a filter for him, and I want to explain to you the logic behind this filter. So if you are in a situation where you are in a similar position to this student of mine, you don't have time, you just want to have one filter where 4 or 5 parameters which are fixed, and daily you are scanning. Sometimes you might get 50 stocks, sometimes you might get 100 stocks in the same filter. If that will work for you, then this video is very important for you. So I have created this filter. So as you can see, there are 41 stocks. Wait. See, there are 41 stocks given by this filter. I call this by my name Rohit. Okay. I have created this filter, so I named it Rohit. So this is 41 stocks out of 4,939 stocks in the Indian stock market. So you are really looking at the top 1% of the total market. But this has only 5 parameters or 5 variables to look at. But it's very strict, and it's applicable both for swing traders and positional traders. In swing trading, you might want to hold on to a stock for not more than 2 months. You want to capture 20 to 40% gain in a very short period of time, maybe 4 to 6 weeks. And position trading is where you might hold on to a stock for 6 months, 1 year, maybe more. As long as it remains above the 50-day simple moving average, you could potentially hold some position at least in the stock, even if you keep selling partially as the stock begins to move in your favor. That's the difference between swing trading and positional trading. And this filter that I have created can be applied in both the cases. The only difference being, for swing trading, you don't need to give too much weight on the fundamentals because you are just playing the stock for a smaller move. So if the stock has decent earnings, and even if it doesn't have earnings, but it has a tight base and the stock is coming out of a base with higher volume, you could potentially play the stock for a shorter move, maybe 1 week, 10-20% return. That is excellent. That is pure play swing trading. But when it comes to position trading, well, the only thing that can keep a stock above the 50-day moving average for 1 year, 2 year, maybe 3 years, the only thing that can keep the stock above that 50-day moving average line is earnings, sales, return on equity. Okay. So use this filter, decide what you want to trade, what you want to do with a particular stock. Do you want to swing trade it or do you want to position trade it? Swing trading, be more relaxed in your approach, be more flexible. But position trading, look at a holistic view of the stock, the technicals as well as fundamentals. So let us have a look at this filter. This is a fantastic classic filter. This will keep you away from market traps. Number one, relative price strength rating. So any price strength rating 80 or more than 80 is captured by this filter. So what does this mean? Let's say a stock has a relative strength rating of 89. Okay. This means that the stock has done better than 89% of all the stocks in the Indian stock market based on a 52-week performance basis. Okay. So we are only looking at the top 20 percentile of stocks in the Indian stock market based on the 52-week performance. So automatically this will keep you in the leading stocks. You will not put your money in laggard stocks or stocks that are slow or stocks that have not delivered performance in the past 52 weeks. This filter will automatically keep you in the best of the best stocks, the top 20 percentile. But remember, when we say top 20 percentile, we are looking at 5,000 stocks. Okay, out of 5,000, if you look at top 20 percentile, you still have 1,000 stocks. So this filter will give you 1,000 stocks, which is still a very large number. On any given day on your watch list, should not be more than 5 stocks, right? 3 to 5 stocks is fine. Out of that 3 to 5, one or two will try to break out of the buy point with high volume. So your target should be to buy one stock per day if you're a swing trader, if you get volume. And if you're a position trader, your target would be to buy one or two stocks per week, not more than that. Per week, one or two stocks, the best of the best, which have all the fundamental and technical characteristics going in its way. So this filter will give you, filter out the top 1,000 stocks for you. These are the best performing stocks in the past 52 weeks, which is a period of 1 year. Then you have buyer demand accumulation distribution rating. So it is divided into 5 categories: A, B, C, D, E. A and B means very high institutional demand. A is very high institutional demand. B is decent institutional demand. So why would you want to put your money in a stock? Because the stock is going up. The stock is being bought by the institutions. Doesn't matter whether you're a swing trader or a position trader, positional trader. You want to buy things which other people are buying. So when you buy a stock, you literally have no control. You are depending on institutions for you to make money, right? After you buy, institutions must come in to buy. So as they are buying, as the volume is coming up, you join them in that breakout rally, you make your gains, and then you pull money out of the stock. So you need institutional demand. So this will ensure that you remain only in those stocks which have high institutional demand. Again, this will only focus your attention on the top maybe 500 or 1,000 stocks. Then group rank. Group rank, there are total 197 industry groups, and Market Smith and William O'Neill team always recommend that you should always remain in the top 40 industries. Again, this is top 20 percentile. If you notice, top 40 industry groups means top 20 percentile of all industry groups put together. Now here you have to look at the 6-month performance of the industry. Industry is like an index of stocks within the industry. So let's say if an industry has given a return of 35%, all that means is that in the past 6 months, if you had bought all the stocks in the industry, how much return would you have made? You would have made 35% return in 6 months. So when you are looking at price strength rating, you are looking at the 52-week performance. When you are looking at group strength rating or industry group rank, you are looking at 6-month performance. That is, at least that is what William O'Neill and Market Smith and team are doing, as far as I understand, if my understanding is correct. Okay. I have read through their material, and that's what I understand. So this will again keep you in the top 20% of the best performing industries. Sorry, top 20% of all the industries, the best performing industries. So if I have to summarize these 3 filters in one statement, I would say that you are buying the best stock in the best industry group with high institutional demand. That's it. That sentence itself will keep you away from crazy stocks, penny stocks, all those stocks which are not worth your time. Okay. Next, you want some decent volume in the stock. So average daily volume is 200,000 shares traded per day. Again, this is for liquidity reasons. As Patrick Walker, whom I consider my mentor, he's a veteran trader in the US market. As Patrick Walker says, you want to be able to glide in and glide out of a stock very smoothly. You don't want to get stuck in an illiquid stock. See, even if you have a very small portfolio, let's say $5,000, $10,000, or let's say in Indian rupees, maybe 1 lakh, 2 lakhs, 5 lakhs. If you have a small portfolio, you might think that, okay, you might play with your, tiny stocks, penny stocks. You might put money, make some big gains quickly. But that is not the approach that you should follow, because even if you're trading a 3 lakh rupees account, you have to assume in your mind that you're managing a 3 crore rupee account, or you have to assume in your mind that you're managing a $3 million account. Now, if you're managing a $3 million account, would you risk like $500,000 on a penny stock where you could lose like 50% in a week? Would you do that? You would not do that, right? So in the beginning, even if you have a small account, think as though you are a um, fund manager with huge amount of corpus to manage, and then treat your uh, trading accordingly, because the habits that you build when you have a small account, those same habits will continue when you will have a big account. So keep your research limited to stocks which are trading at least 200,000 shares per day on an average. Now, when I say average, I am talking about the 50-day simple moving average of the volume bars. Okay. So the 50-day moving average line, which is the blue line on my chart, which I show on almost all of my videos, that blue line should at least be 200,000 shares traded per day. That will keep you in liquid stocks. This will automatically keep you away from those micro cap companies which don't have liquidity, companies which are red flagged, companies which are very small, companies which are penny stocks. All that junk will automatically go away, because those stocks, a lot of manipulation could happen in those stocks. So you are automatically staying away from all of that garbage. Then this is very important: price versus 52-week high. This is again something I borrowed from Patrick Walker. The 52-week high basically is in the past 1 year, what's the maximum price attained by the stock? That's the 52-week high. So let's say today is, say, 28th of August 2024. Now, when I go back to 28th of August 2023, during this 52-week period, what's the highest price achieved by the stock? And is the current price within 20% distance of that 52-week high? If that is the case, then I'm interested in the stock. So again, this will filter out a lot of stocks. See, you start with 1,000 stocks, and then when you apply all these filters, you end up with only 41 stocks. So see, each of these filters is keeping you away from stocks that are not worth your time. Okay. And if you consistently daily use these filters, because these are all the analysis for you is already done by MarketSmith. Okay. These ratings are extremely powerful. There are books written on these ratings. If you read William O'Neill's book, How to Make Money in Stocks, he will give you justification as to why you should use these ratings. Now, if you want to read all of that justification and try to find the logic behind why to use this, you can do that. If you have time, maybe you are traveling by flight somewhere, maybe it's a 4-hour flight. Out of curiosity, you could read the reasons behind using these filters. But I'm giving you the recipe here. Just simply stick to these stocks. Great investors like David Ryan, William O'Neill, Patrick Walker, they are using the similar kind of filters, not exactly the same, but very, very similar to this. Like 90% of their stocks that they have bought in their career, I'm sure it met this criteria. Okay. I can tell you from what they have been writing and what they have been saying. I have done extensive research on the best traders and investors in the world. So I can tell you these 5 parameters will keep you safe, whether you are a swing trader or a positional trader. Very simple. And another advantage I would like to give you about this, see, I'm not using any other filter, just 5 filters. Okay. I apply this 41 stocks. I click here. So you have by alphabetical order. Even out of these 41, half of them are red flagged. Red flagged means maybe there is some criminal case on the company, or maybe some legal case, or some regulator is keeping an eye, maybe some manipulation. even half of these stocks I can reject quickly. So I'm only dealing with like 20 stocks. Out of 20, if I don't find anything, I'm not going to buy anything the next day. I'll just sit with the holdings in my uh, portfolio. So if I'm a position trader, I might not buy too many times during a week, but when I buy, I put like 10, 15%. But if I am a swing trader, I might take a 2.5 or 5% position and start building as the stock continues to build multiple bases along its uptrend. One good advantage of using this filter is since you're using this every day, this gives you the pulse of the market. See, how do you understand whether the market is doing well, not doing well? Well, you could look at the index, but the problem with that approach is the index consists of stocks which are generally large cap, or the index is generally influenced by the larger companies. An index does not represent the market. What this list represents is the stocks that come under your filter. So imagine today you have 41 stocks. Maybe after 2 weeks, you might have 65 stocks here. What does that mean? It means that a lot of stocks are setting up, a lot of stocks are coming into your radar, which means the market is doing well. Now imagine after 1 or 2 weeks, instead of 41, you have 21 stocks only. What does that mean? It means that stocks are going away from your radar. That means there are not many stocks that meet your rigid criteria. So which means the market is probably not doing well. It is weak. Okay. So this is like an index. It's like a personal index that you have created for yourself. Now you might have a situation where this number is 100, so you have 100 stocks, but consistently for 4 or 5 days you are not getting any setups. So maybe the market is running too fast. It is not taking time to breathe. It is not taking time to form a base. That is a conclusion that you can draw. So the advantage of using just one filter every single day is that it gives you a sense of what is happening in the market. When you are using like 10 different screens, you really have no idea what is happening. It is more based on intuition. When you look at multiple screens, that will tell you, your intuition will tell you where the market is going. But this is more objective method. You can actually track how many stocks showed up last month, how many stocks are showing up this month on an average. So this will give you an idea as to what is going on in the market. Sometimes it may happen that the number of stocks are less, but the setups are very tight. Okay, maybe number of stocks are 32, but out of 32, you are getting 5 stocks which are forming a tight base. But on the other hand, you might have 100 stocks, but maybe only one setup. And that too, it doesn't have earnings. Okay, so that's a questionable market. So this is what I wanted to discuss with you. So if you want to simplify your filtering process, at least in Indian stock market, just use this single filter. Your time, a lot of your time will get saved. One of my mentors, he says that if you want to speed up in life, you first have to slow down. So 41 stocks, it will not take you more than 5 minutes to go through all of these 41 charts. Okay, very, very simple. And if you like one or two or three charts, just go and look at the fundamentals, the ratings, and the weekly chart and whatnot. Just check all the parameters. If something clicks, if something feels very compelling, put an alert on that stock. And if it starts to move up on high volume, buy with a market order. As simple as that. So your entire filtering process, stock selection process, trade execution process, everything becomes extremely simplified. And that is important for your mental capital, your psychological capital. We have, as Patrick Walker says, we have financial capital and psychological capital. If I am having just 2 stocks in my portfolio, it's very easy to manage those 2 stocks. But if I have 10 stocks in my portfolio, becomes very difficult to manage them. And this filter that I have shared with you simplifies the process for you. Okay. Thank you so much. Hope this helps. Please share this video.